Greetings, members one and all of the Salivation Nation. We all know that gold has been up recently, and that's good news for many of us. But why is the dollar still doing so well? Let's kind of take a look at this. Think a little bit outside the box, as this section of Market Watch and Opinion Piece talks about. We'll explore some of this and come up with some theories of our own here as to why this is happening. Why is gold up and why is the dollar up? The US dollar is at an all-time high and gold is rising too. And this is rare. Usually we see it the other way around. But learn a little something here from this. And there's two different measures of the dollar. There's a broad trade weighted dollar index, which is at 130.69. And after reaching its all-time high of 131.57 in September. It's a broad dollar index that is weighted by trade volumes and includes the Chinese yuan as well as other emerging market currencies and, reserve currencies there. The US dollar index, which isn't near its all-time highs, isn't trade weighted and doesn't include the yuan or other emerging market currencies. In that regard, it is outdated and does not accurately reflect the true exchange rate strength of the U.S. currency. The past year has been somewhat surreal in the gold markets as we have the rare occurrence of the dollar rising in somewhat slow fashion, while gold bullion has appreciated about $300 per ounce to trade near $1,500. Now, historically, a rising dollar and a rising gold bullion haven't gone together. But the distortions that have come with global quantitative easing policies are to blame for the breakdown in this inverse relationship. And there's a chart that's associated with this, and this kind of, I believe, is kind of the crux of the matter here. Although we can see here the trade-weighted dollar index, broad goods here, we can see that it's the highest it's really ever been here, at least since the measure of this, since 1995 here. And we can see these periods here are recessions. So we have a small recession here, a larger recession here. And we can see that for the longest time, gold was trading very, very flat through this period. In fact, it was down, and the dollar index is quite high through this period, through the mid-2000s. Really, the recession didn't do much for gold prices, too, the small one here. And here you can see the gold had been kind of rising throughout, the housing market. When the dollar was increases and they came into parity, inversed each other. And then we can see kind of what has happened wildly here, especially with quantitative easing and the like, and bringing strength and then the weakness into the dollar here and through this period. And gold prices reached record highs here. Now they're getting back close to those highs, but we're seeing that these lines are trending together here, going upwards, and that's kind of what we're going to take a look at and see why this is happening. And very interesting indeed. Federal Reserve cutting rate cycles in the past have meant a lower dollar and a boom for gold bullion, but the Fed funds rate is no longer the sole determinant that pushes the dollar up or down, but also the policies of either QE or quantitative tightening. Moreover, if the Fed is cutting the Fed's fund rate and the European Central Bank is accelerating QE due to bad economic numbers from the old continent, the dollar will not decline as the interest rate differences are still in favor of the greenback. And actually, let's take a look at this chart and see the bonds and Treasury, Germany government bond and U.S. government bond 10-year yields here. Way low here. The 10-year Treasury, at the last count, yields more than 2% points, more than 10-year German bonds, which are firmly struck with negative territory. It does not help that a potential no-deal Brexit will put further pressure on the euro and Eurozone economy. This is why we have the dollar rising, due to accelerating QE from the European Central Bank that pushes the euro lower at the same time that gold bullion is rising. And I'm going to stop there because I think it's paramount to understand this. And I believe that when you take this on its face and what's going on here, we can see that gold here is reflecting the price, even in U.S. dollars to a point, but especially in world currencies, um, is reflecting a real problem economically around the world. And so many nations are kind of struggling, right? The apex or precipice of something big when they're reacting to it. There's a lot of Keynesian reactions to this, but it's not really creating the massive inflation that some had suspected could happen. However, the currencies are in trouble. I mean, there's some issues with these currencies, with these nations, and what's going to emerge from that, we shall see. But nonetheless, they're struggling, and people are predicting that potentially, with what's going on in the world and different nations' economies, and what the European Central Bank is doing, what's happening with the renminbi and other nations, and they're in the breadbasket of world currencies by the IMF, is that they're seeing trouble ahead. And we're seeing trouble ahead too, really, here in the United States. However, with that being said, I think in many cases what's propping us up here in the United States is two things. Number one, less government intrusion and stimulus by tax cuts, and so less regulation and more tax cuts means that the free market enterprise system can work, and that's really what has made America great in the beginning, and that's really helped us and saved us in many aspects here in the United States. The other thing that's going for us is that we really are the best of the worst in terms of our currency is concerned. Obviously, the dollar has a hegemony that is evident throughout the world in transactions and things. Many things are still done through the U.S. dollar system. It's obvious that there's many nations around the world, especially from the BRICS nations, that would like to see themselves removed from the dollar-dominated system. And that's why they're accumulating this precious metal here, gold. And I believe that their accumulation of gold is helping to drive the price up. I don't know if this article will talk about that, but nonetheless, we're seeing some interesting movements and actions in what's going on with gold, and the fact that these nations are accumulating it at almost record rates these days, I believe speaks to what gold is. Gold is money. It's a tier 1 asset now, according to the Bank of International Settlements, and that is the central bank of the central banks. And with that being said, it should be duly noted that gold is the one way that these other nations can free themselves from the hegemony of the U.S. dollar. And we should be fearful of that, because how is the dollar index going to be weighed, or how is this trading, the dollar trade value here? I think, the trade weighted U.S. dollar index, which is a much more current, up-to-date measure. Now, there's trade concerns, obviously, right now. We are in the midst of a trade war with China, and we have uncodified trade deals now with the USMCA. That's the North replaces NAFTA. We have negotiations for trade, direct trade with Great Britain, and we have trade or the United Kingdom and with the European Central Bank. So, or the European Union. So how will this play out? When will we see settlement of all this stuff? I think it's only then, until we see the normal activity movements of where gold and the dollar will be. But in such as the case, the trade-weighted dollar index is high for broad goods, considering what's going on with trade. And maybe that is because of tariffs. I don't know. And trade is something, an area that it can be very complex in measuring it out. But nonetheless, that's where you have it. But this metal here, gold, will shine on. It will continue to hold promise to what it has done for millennia. That is, its true money, its fungibility, its divisibility, its value, its worth. And I think it surpasses all technological deterrence. And obviously you can use technology in its favor, and I think that is one neat aspect about gold is that technology can be utilized with it as far as the trade, as far as electronic traded or exchange traded funds and electronic markets, using it as and tie in with cryptocurrency. But nonetheless, as long as you have the faith that the physical is there to back it up, having the physical, I think, is paramount, and that is crucial, I believe. And it's obviously what central banks are doing. They're holding the physical gold. And physical gold, there is only a finite amount of it. It has always been money and will continue to be money. And so I believe that it is an unusual circumstance. I do agree with the author of this article that it certainly is an unusual circumstance to drive the rare simultaneous rise in gold and the dollar. But I think we're in unusual times, unusual circumstances. And make no mistake, and I'm not a doom and gloomer by any stretch, but the way that things are, we could be at the precipice of a perfect storm, where the next downturn could be a lot worse, especially if things worsen around the world. And there's only so much more that we can take on it, especially if we continue or we move closer to these Keynesian policies of printing money like it's going out of style, quantitative easing, and the like, raising taxes, that type of thing. It's free enterprise, and having a strong, stable dollar is what we want. It's better to have a strong, stable dollar than a strong dollar that's not backed or is not stable. So there you have it. So post your thoughts below about this dichotomy, this strange aspect of the dollar and gold. Where do you see things going? Do you think it's going to go higher? The dollar index does go lower. Do you think it's gonna propel gold to the moon, or do you think it's something else is gonna come in like a cog in the wheel, and gold's just gonna lament for a while or languish in this level or go back down? Let me know what you think. Would like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, share, comment, and subscribe.